Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing the social risk. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Of course, you will get access to the charts that you are about to see, as well as a lot more that you'll see presented on the YouTube channel quite frequently. Let's go ahead and jump in. So, a few days ago, I put out a video on Bitcoin called The On-Chain Risk. Now, it's funny because I thought that was actually a very compelling video that we went through step by step and talked about why it seems like Bitcoin would go lower than 17.5K based on the on-chain risk. We talked about this, just a few days, in fact, before we saw the lower low. But it's also funny because that video didn't really do that well. Not a lot of people even actually watched that video. I would encourage you to go back and watch that video if you missed it, because it does give a fairly compelling, it provides a piece to the puzzle, if you will. But another piece to the puzzle is arguably the social risk. And the social risk, you could say, is, you could sort of think of it like this. When there's a lot of people flocking to the space, this is indicative of a bubble. Okay, so the people that got in really early are likely going to be selling to the people that get in very late. That's just how it works, right? I don't control how it works. That's just how it is. That's just what it is. And we have to accept it. If you got in during the relatively boring times, then when the market goes back into a bull run, assuming that it does, then the people that got in early when no one really wanted to get in, they're usually selling to all the tourists that come in and buy at the more elevated prices. If you think back to this year, I've just simply said, cash is king this year. The altcoin market is going to take a really big hit. And one of the things that I've been tracking quite closely is, in fact, the social risk. So what I'm going to do is we're going to go through 5 social metrics. We're then going to combine those 5 social metrics into a single social risk metric. Okay, and this should allow us to gauge what is the current social risk. So the first thing we're going to look at here are new YouTube subscribers. And one of the things you may note is that, like many metrics, the amount of new subscribers to popular cryptocurrency YouTube channels, the bulk of these new subscribers occurred in early 2021. While there was sort of a secondary influx that occurred in later 2021, a majority of this occurred obviously in early 2021. And then ever since then, we've just been simply in a bear market. This is showing the 7-day simple moving average. If we remove the moving average, it would look something like this, which is a little bit harder to sort of make out. You can see if it's below 0, of course, some channels are losing subscribers, in fact, which is actually quite common in a bear market as people really start to lose interest. And you can also look at this sort of in terms of the total, meaning like total number of YouTube subscribers over time. And you can see we had this sort of parabolic phase for a while, but then it's really started to level off. We could look at it on a logarithmic scale. It's not as useful, but you can see that growth has really leveled off over the last year or so, right? I mean, in 2022, we're nowhere near the same growth that we saw in 2021. So again, this is one metric. This is one way to look at it. We could also look at, say, like the 30-day moving average of new YouTube subscribers, even look at like the 90-day. And again, we are very clearly just in a crypto winter, a bear market. Just is what it is, right? Let's just call it what it is and accept it. If you haven't already, I mean, it's probably at this point, like, there's nothing's going to convince you, I guess, at this point, if you're still don't think it's a bear market. But that's where we stand with the number of YouTube subscribers. Now, YouTube views is something different, right? So like in this case, we're not measuring the number of new subscribers to popular crypto YouTube channels. We're just looking at the number of views. So perhaps, channels could have 1 million subscribers, but maybe only 50,000 people are watching. Or maybe because there's something going on in the space, you have 200,000 people watching, right? A certain video. Well, my videos don't really get 200,000 views, but some people's do, right? I mean, some popular YouTubers do get a lot more views. And actually, you'll see that the number of views for a lot of these popular crypto YouTube channels sort of hit their peak cumulatively back in May of 2021. And ever since then, it's more or less just been in a steady decline. Now we could look at other things like this is a 7-day estimate. We could look at no moving average just to see what the data looks like. If you don't want to apply any say a moving average to it, or you could even look at things like the 90-day and see that like it looks like just simply a double peak, right? A double peak where we had one peak and then a second peak, and then it's just been a bear market ever since. Now, arguably, it has leveled off a little bit recently, which is maybe a good thing, but with the way the bear markets go, the views just sort of continue to diminish over time. At first, people like to watch it because it's kind of like watching a slow motion train wreck, but eventually people tune out. Remember, markets bottom on apathy. That's where they bottom. Not when everyone's watching and everyone's asking, is the bottom in? They tend to bottom on apathy when no one really cares. The three other metrics that we're going to use here to go into the social risk are new Twitter followers to popular Twitter accounts. And you can see a fairly clear double peak. In fact, this metric is arguably one of the few that called the second top essentially, almost to the day. I mean, this is a moving average. If we take the moving average out, you can see it was a little bit sooner. But a fairly interesting way to measure it. Now, to some degree, this is biased because had the price of Bitcoin continued to go up, you could argue this would just continue to go up with it. But when looking back at it, you can see the fair, clear, double peak in the number of new Twitter followers to popular Twitter accounts that focus on Bitcoin and cryptocurrency in general. And ever since then, it's been fairly boring up until somewhat recently where new Twitter followers has actually gone up. But I think a lot of that is just because of all the drama in the space, right? It's not because, new Twitter followers aren't going to popular Twitter crypto accounts aren't going up because the price is going up. It's just because, again, there's a ton of drama in the space and with everything going on with these exchanges and whatnot, a lot of people are starting to tune back in again, but not necessarily for the right reasons. The other two that I want to show are Twitter followers to exchanges. So if you look at just simply followers to exchanges, I'm not promoting any specific exchange. In fact, I never promote exchanges. I don't recommend people keep their crypto on exchanges in the first place. But it is an interesting metric to at least look at to gauge, are retail investors coming into exchanges and whatnot. And what you may notice actually is when you see a influx of new Twitter followers to crypto exchanges, typically the price does not do well shortly thereafter, right? I mean, you can see going all the way back to 2018, we had an influx of followers to exchanges on Twitter, and the price went down. Over here, an influx into popular Twitter accounts that were on for exchanges. Again, price continued to go down. You saw it in here in November of 2021, and we're also seeing it again today, right? So again, this is not typically a good metric when wanting to accumulate crypto in sort of a discrete way. The way you do well in crypto is you buy it when no one is paying attention to it, not when everyone is watching it and everyone feels the anxiety of the price going down. And I've been fairly clear about that all year, that we're likely going to see new lows. And in fact, it took a long time to go below 17.5, but we in fact did make it, right? We eventually did make it there. And it arguably still continues to be the path of least resistance. Again, I mean, we've talked about this all year. The Fed's tightening. I mean, it just is what it is, right? They're draining liquidity. This is not good for crypto. And this is why I'll continue to say that, cash remains king, especially within reference to the cryptocurrency market. And it's remained king all year. And if you look at new Twitter followers to layer ones, this is what it looks like. So we're looking at a lot of the different layer one blockchains and following Twitter followers to those accounts. And you can see that, normally when it spikes, it's because a lot of people are coming in, but it's not a good thing, right? It typically maybe the price is sideways for a little bit, but typically it breaks down and you're seeing a lot of Twitter followers to these layer ones coming in right now. Normally when it spikes, again, it's not the best sign. When you want to think about accumulating crypto, as I said before, it's simply when people don't care about it, right? When the destruction has taken place, when the altcoin reckoning is over, when no one's even talking about it anymore, right? When there isn't a new company going under every other Tuesday because they are, because they were over leveraged with client funds, like that, typically it's just when people no longer care about it is when you should get interested. And I mean, I said before, as long as you're seeing my videos get like like 60,000 views and whatnot, like I mean, there's a good chance we still have a ways to go, right? That's just the truth. It's just the truth. It's just that markets tend to bottom on apathy and not when everyone is tuning in to watch. So then how do we make use of this, right? How do we make use of all this stuff? And again, remember, if you want access to this stuff, we do have the website intothecryptoverse.com. We are running a sale right now, so you can check it out. We also have weekly videos every week. We have a weekly newsletter. We have trading view indicators. We have a Telegram alerts channel, a Telegram chat room, etc. A ton of stuff. You can always cancel if it's not your thing after a month. But how do we use this? Like, I mean, it's one thing to look at this and say, well, this makes sense, but how do you find something that is potentially more worthwhile? Well, you combine all of them and you come up with a risk metric. And again, we did this with the on-chain risk that I posted a video on a few days ago that not a lot of people watched. Again, go watch that video if you like this one, because instead of focusing on the social risk, we focus on the on-chain risk. And if you look at the social risk, if we look at all of them, right? So we have the YouTube subs risk, the YouTube views risk, the Twitter analyst risk, the Twitter exchange risk, and Twitter layer 1 risk. This is what you get. Now, what is the risk? So what we're looking at is we're normalizing all these metrics to be between 0 and 1 to try to get a gauge as to what is the risk of all this, this influx of people to the space. If we say like at peak new or peak number of YouTube views over, say, like a 7-day SMA, that's pretty high risk. If we're not really getting any views anymore, that's pretty low risk. Let's normalize it between 0 and 1. And then furthermore, let's assume that there is a growing level of interest over time. Because from one bear market to another, while there is apathy in both, there should be a larger group of people interested in crypto in subsequent bear markets, just because there's been more adoption, right? So essentially, the price of Bitcoin goes up. A lot of people come in, they get excited about it because the price is going up, and then the price goes down. Most people leave, but a few people stay. That's the first bear market. The second bear market, again, you have more people come in, because the price is going up, and then they get wrecked when the price goes down, but a few people stay to enjoy the next bull market, but most people leave. But then you still have more people than the bear market before, and so on and so forth. So we assume that the social risk, we assume that the base number of viewers and the base number of subscribers and all this sort of stuff, it should go up as a function of time. So that's one of the most common forms of criticism, is that, well, because I talk about this on the premium side all the time, is one of the most common forms of criticism is that, well, this doesn't account for growing adoption. It does actually, right? It's actually baked into all these metrics. But again, this is somewhat messy. So what do? You combine them all into a single total social risk metric and see what you get. And this is what it looks like, right? This is what it looks like. And I've been following this for quite some time. I think since late 2021, early 2022. And again, it's one of the few metrics that actually went above 0.9 risk in November, showing that like there was a ton of excitement in the space, but it wasn't being reflected on a lot of the other indicators, but socially it was. Like, everyone was watching, right? I mean, everyone was watching. Is Bitcoin going to get to these high prices by the end of the year, like a lot of people are calling for? Social risk was high, just like it was back in April and May. And what you'll notice is that ever since May of 2021, the social risk has been putting in lower highs, okay? Lower highs, meaning, yeah, like people come to tune in every time something new happens, but not as many people as last time, not as many people as the last major event. Like think about everything that happened back in, earlier this year with some of the major platforms that went down, right? People came in to tune in and watch the price of Bitcoin drop, and then we dropped, right? But this time we come up, and hard to say exactly where it's going to peak. Is it going to go all the way up to where the last time it peaked, all the way up at 0.684? It's a tough say. Right now, the social risk is at 0.588. but it already seems like, some people are starting to get apathetic about everything going on with the exchanges and whatnot. I don't know how high it's going to go, but look, so far just been lower highs, but it's also been lower lows as well. So the argument, of course, is, well, what if it takes the social risk going all the way back down to, say, somewhere between 0 to 0.2? Let's say 0 to 0.2 is the range that we ultimately need to get to before the bear market is really reset. And if you want to be conservative, say between 0 to 0.1. There's no reason we can't get there because, again, the metric does account for growing adoption. So we don't even have to go to the same levels of social interest back in 2018, 2019. We could go to a nominally larger level of interest, but it's accounting for that and still go to the 0 to 0.1 risk band. So what you might notice, though, is that normally when the social risk spikes, it's not a good thing, right? It normally means like bad things are going to happen to the price. If history is any indication. Doesn't mean you can't go up in like a very short period, like over the next like 20 days, 30 days, something like that. But generally speaking, it's going to lead to lower prices when you're sort of in this structural bear market. Of course, this is another thing over here, like when it's spiking and putting in lower or higher highs and higher lows, that's a different way to look at it. But that's not what we're looking at right now, right? Like we're not putting in higher lows and higher highs. We're putting in lower highs and lower lows on the social risk. And actually, if you look back at what happened over in early 2022, or earlier in May, you'll notice that the social risk spiked on Bitcoin's first drop, and then it went sideways for a while. The price of Bitcoin went sideways, but while the price of Bitcoin went sideways, the social risk fell off a cliff because everyone became uninterested again. The price had fallen off a cliff, everyone came to tune back in, and then it just went sideways for a month, and during that month, the social risk went down. And then during the next drop, the social risk did not spike because people had already given up in May, right? Like the price bottomed in June, but according to the social risk, a lot of people had already given up in May. So by the time we saw that local bottom in June, the market was more apathetic than it was in May when we were really having that, that first major drop, right? That's something to consider with reference to what we're experiencing today. We saw a pretty major drop all the way from like 21K down to 15.5, and the social risk is exploding. But what happens if the price of Bitcoin gets somewhat complacent, and if it's going sideways right now, right? I mean, it's more or less moving sideways. What happens if we just get complacent for a while and people lose interest again, and then the price of Bitcoin goes down again? Then you're probably going to see more apathy. Remember, markets tend to bottom on apathy, not when everyone's watching it, right? So the price will actually likely bottom when no one really cares, not when everyone's wondering, is it the bottom, right? Bottoms usually occur when no one's really asking, not when everyone's asking, is it the bottom? Okay, like it almost can seem somewhat desperate, right? Like how many new people are coming into the space right now when they don't even know who to trust, right? They don't even know if they can come in and actually keep their crypto or what to do. I mean, it can be a somewhat complicated thing for someone who's new. Like if you're new, you probably just think like, oh, maybe I'll just go to some exchange and buy Bitcoin or something and then just keep it there. But now they're looking at all these major exchanges and platforms go under. So there's no clear, they don't really have the confidence to say, even if they buy their crypto, that they'll even be able to keep it, So that's not a good thing. So I think the argument remains, right? Markets tend to bottom on apathy, not when everyone's tuning in. So the social risk has spiked back up. It's likely going to start to come back down eventually. And then if Bitcoin continues to push lower, you might see the apathy remain. And then you can start talking about a more significant bottom, I think. Again, this is what the social risk metric looks like. We follow this quite frequently. Let me know what you guys think about it in the comments below. And again, you can get access to it through the website at intothe.cryptoverse.com. We are running a sale that will run through the end of November. Thank you guys for tuning in. Make sure you subscribe if you're not subscribed. Give the video a thumbs up. I'll see you guys next time. Bye.